Welcome to Bears in Exile. Today is Thursday, March 29th, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLZ, SLV, XOI, CompQ, NASDAQ, which is the NASDAQ, Apple, GE, XLF, and VXX. Okie dokie. Not a bad day, not a great day. Plenty of mixed signals. We had some of what we wanted to occur happen, and some things we did not want to have occur also happen. So, without further ado, we'll march right on through it. Okay, we've been thinking that the Bears' essential last chance is through the end of this week, which tomorrow will be the end of the week. And I still think that there is good chance that we'll have further downside into Friday. But post-Friday, I'm not expecting too much. We could have some leakage into Monday and Tuesday. That would be very nice. But after that, especially after that, no assumptions of any kind of miracles to the downside by any means. Today we made a lower low than yesterday. That's positive for the Bears, but we did not challenge the previous floor. That's not good. That's we were hoping that would come into play, and certainly tomorrow it may. But that is the point from which either something really good is going to happen or it's just going to bounce off. And I'm more of the opinion that it should bounce off. Should it get there, but getting there is a nice down move in and of itself, so that's personally what I'm looking for. Getting down here to this previous floor, I mean, if we'd broken this today, that might have been possible on Monday or Tuesday, or at least an attempt, but at this moment, not looking like it should be in the cards. We still have the middle Bollinger Band above the short-term moving averages and the candle, but not by much. So that is not something really to get. Now we can see the Bollinger Bands are constricting, meaning that there's going to be a sizable move coming shortly. Yeah, that could be to the downside, but with earnings coming, I'd be more inclined to say that when it finally does its magic, it isn't going to be to the downside. Now, not to be a killjoy, 14-day RSI moving average still ticking up, stochastics essentially mixed, down on the CCI, sideways on the RSI, down on the MACD histogram, down on the MACD. Looking at the histogram and the MACD, see that's good, and definitely we should have some more, potentially have some more to the downside tomorrow. Do I think it's going to get all the way to this bottom trough on this go? Not really. I don't. At some point it's going to turn around and go back up, and I think it's going to be much higher than back here. So, taking us through Friday, it still has the potential for doing that, absolutely. 60-minute time frame. You know, it's kind of funny. They lost all of this on the at the open, and it took the entire day and all of that energy just to claw it back. Yeah, they got a little bit above it, but still, that's a lot of energy produced just for counteracting what happens in a moment. So that was really cool. 14-day RSI moving average still ticking down in the 60-minute time frame. MACD looking for a bullish cross up on the MACD histogram, up on the RSI, up on the CCI, up on the stochastics. These are getting pretty high, and they can roll over. Do I think that they're going to get as big a high as back here? At the moment, no. So going up, falling apart, turning around, taking us through the end of Friday, that would work, and finish up the move with the 14-day on its way to the bottom. So anyway, that's my thinking. Maybe it's totally wrong. Maybe it's just going to shoot off into outer space, but I think that that's very likely. So continued up into the morning tomorrow, perhaps, and then turn around and retreat into the weekend. That would make sense to me. SPX, same thing as the Dow. Notice the lower than yesterday low, very nice. Closing below the real candle of yesterday. Yeah, that's minor. It would have been better if it had been the tail, but it is what it is. Very large hammer. 14-day ticking up, stochastics pointing down, not too strong, but pointing down, that counts. CCI ticking down, RSI ticking down, a bearish cross on the MACD histogram ticking down, and those are the indications to me that we should have a little more follow through going into tomorrow, maybe leakage into Monday and Tuesday. That's great. I like it. 60 minutes going to be very much like the Dow, except it did not recover everything that it lost in the opening moments. And if we were to cut away, this time, let's actually do that, so that it looks like what we were seeing yesterday. See the position of the CCI, the stochastics, the RSI, the histogram, all sloping up. And then you get to the end of today, and essentially it's the same thing. They're a little bit higher than yesterday, but yesterday we were saying they're starting to slope up. We're exactly in the same situation as yesterday, except the price is a little bit lower and the indicators are a little bit higher, but it's exactly the same situation. So that's kind of fun, that drop essentially resetting it and just making these move up a little bit more, making the upturn a little closer to its potential top. So that's nice. That is like rope-a-dope with boxers. So I do like that. The NASDAQ, we have the downtick from yesterday. It came so close to resolving it, but not quite. So close. 14-day ticking up, stochastics pointing down much higher than the down, the SPX, which is not especially good. CCI ticking down, RSI ticking down, MACD still turning down. No cross, no bearish cross yet, and the MACD histogram ticking down. 60-minute time frame, and it did not recover. Oh, that's pretty messy. It did not recover everything that it lost in the opening moments, which is also cool. Getting to the major price consensus level and backing away in the 60-minute time frame, and once again very similar to the video last night, where things are starting to slope up, and it's exactly or slightly less price-wise than it was, yet the secondaries are now more developed. So I like that. The VIX, yeah, this one is a killjoy. Getting all the way to the long-term moving average bar and just falling away from it in rather spectacular fashion. 14-day ticking down slightly. Stochastic still ticking up, CCI still ticking up, RSI ticking up, bullish cross on the MACD histogram ticking up, except for the 14-day RSI moving average. This is good. These can all get higher, bring the price up higher, and that takes us through Friday, which is what we were looking for. I like it. 60-minute time frame. It just fell apart. That's just so darn ugly. CCI oversold. Stochastics, the fast is oversold, the slow is not. RSI ticking down, getting to the 50. MACD getting a bearish cross, and MACD histogram ticking down into negative. What is there to say about this beyond that it is breaking the long-term moving averages in the 60-minute time frame? That's not good. That's this is not what we wanted in to be happening with the VIX, but that is what's happening with the VIX, so it has to be reported. Can't cover that up. So, XOI. Now here's, excuse me. Now here's one of the things that could definitely put a wrench into the idea of tomorrow being further down movement. Oil has this nice green hammer, possible reversal signal. Yes, we have the short-term moving averages still pointing down in a rather wonderful way. Middle Bollinger Band above them, very pretty, very bearish. But we hit the lower Bollinger Band, bounced off of it. It's very close to it. It was close to it yesterday. That didn't matter, but still, we have to take notice that it is that close, and it is a potential reversal candle. But beyond that, 14-day RSI moving average ticking down, stochastics attempting to roll over, sideways on the CCI, sideways on the RSI, down on the MACD, down on the MACD histogram. Overall, not bad for bears, just the potential for a bump up, which would, screw up our Friday down day. So, something to be aware of, something to watch, and that'll be really easy to see in the morning what oil is doing, and essentially know pretty quick if Friday is going to pan out or not. If it continues to push down the lower Bollinger Band, hey, fabulous. But that is what it is. TNA, once again, another stinking hammer. The dippers came in just like on everything else, started buying everything up. Been a totally different story if it closed at the lows of the day, but nothing anywhere near that happening. Closing above the major price consensus level, just shy of the major price consensus level, and just shy of the upper price consensus level. So there are some indications here just by the positioning that this is this could go down some more tomorrow. TNA. 14-day is ticking up. Stochastics are rolling over and pointing down. CCI ticking down, RSI ticking down, histogram ticking down, MACD ticking down. We'd have no bearish cross, unfortunately, like we do on some of the other things. So that is also a question mark. It did kiss the long-term moving average bar today. That is good. It bounced away from it. Kind of should, because that is support. And the opening drop, they tried to recover it the entire day and failed. All of that energy expended for being red. That's positive for bears, absolutely. And really just getting to the long-term moving average bar. If it bounces away from that, yes, that is definitely bearish in the 60-minute time frame, and it's actually normal, even though they have not flipped over and crossed. But still, very, very nice. 14-day RSI moving average ticking down, pointing down, good for bears. And just like the Dow, just like SPX, everything else is slanting up. If we have another gap down tomorrow, that'd be insanely wonderful. But definitely the potential for a little more up in the morning, and then hopefully fade away into the weekend. UUP. We want this sucker to be going up. And this is... Is this a bearish engulfing open? It is not. 4 cents off. So good for bears. That would have been a indication that we'd have bearish engulfing, and not a good thing. But we can see the 14-day RSI moving average ticking down, not good for bears. Stochastics are attempting to turn around, but very early, possibly good for bears, maybe. Up on the CCI, down on the RSI, slightly up on the MACD histogram, down on the MACD, very, very mixed bag. We do not have an uptick yet, unfortunately. And we are below the major price consensus level. It went up, kissed it, and backed away. It would have been much better to close above it. That did not happen. So yet another possible monkey wrench tomorrow, and oil is going to have, oil and the dollar are going to be the two big factors, I believe. Well, we couldn't get anything from the dollar. Maybe we can get something from the euro. Oh, and do we? We have a downtick today. Gives us a target just shy of where it went. So cool. We do have a downtick. That is something. We do want the euro going down. So there's the just one little piece of information that might aid in that. That would help with our Friday target. 14-day RSI moving average ticking up. That's not what we want. Stochastics appearing to want to turn over, but very early. Down on the CCI, up on the RSI, sideways on the MACD, and down on the MACD histogram. So overall I would say slanted to the bears, but not by a huge margin. But any favor in the odds, I'll take it. So very minor, but even a little bit better is welcome. GLD, our second VIX, even with the dollar being down today, the VIX was up. And with fear, the gold was green. Yeah, it's a small lower position than yesterday's close, but that is what it is. 14-day ticking down. Stochastics mix, down on the CCI, down on the RSI, sideways on the MACD, sideways on the MACD histogram. Very mixed bag, not too much to take away, just like last night. And going on to silver, stronger than gold, higher close than yesterday, and 14 days still ticking down. Stochastics mix, sideways on the CCI, down tick on the RSI, up on the MACD histogram, and up on the MACD very, very slightly. XLF, the financials. Now this one, oh come on. And XLF ending also with a hammer and resolving a downtick target that we got today. So that's nice. Got to see what it wants to do next. But beyond that, we do have a few good signs. 14 days still ticking up, not good for bears. Stochastics are trying to roll over, good for bears. CCI ticking down, RSI ticking down, MACD going for a bearish cross, not completed yet, and the MACD histogram ticking down, very, very good for bears. And a further down movement of any type in the financials would definitely aid in Friday being a down day. So very nice. I do like it. And no illusions of it's going to go down to the bar and break it and fall apart. Just going down to the previous floor is enough for me. You can see the Bollinger Bands constricting in a rather strong way. So we know that there's a move coming, and it's a little bit down before that big move, which will probably be to the upside, is completely desirable. GE. Wow. You know, it's the same thing all over the place. A fat body, almost a hammer. I guess I'll just call it that since it has the longest dealie. Bollinger Bands constricting massively. Histogram in the MACD ticking down slightly. RSI ticking down. CCI ticking down. Stochastics going down. 14-day ticking up. Essentially everything saying a little more down. It's not far away from the floor at all. And the 14 days ticking up, which should make the down move muted. But that would be perfect. And going on to Apple, very massively important. We have a downtick on Apple. The last one did not resolve itself. Something to point out. This downtick target gives us 595 as the target, ending with a spinning top. Fast stochastic actually getting below 80, everything else locked in the upright position. CCI ticking down, RSI ticking down very, very high. Getting the bearish cross on the MACD histogram ticking down. Is this time for the move in Apple? Maybe. But, you know, we just won't know on this one until it happens. But it'll probably be pretty cool when it does happen and take everything with it. So that's also very, very nice. And potential feather in the cap for down day on Friday, possible leakage into Monday and Tuesday. And last but not least, the VXX, just for fun. These crazy VIX instruments. We still have not resolved the uptick target. And massive retreat today, just like the VIX. Actually tracking it correctly. Amazing. 14 days still ticking down. Stochastics up, CCI up, RSI up, MACD histogram up, MACD up, even with big nasty red. So definitely could be some more to the upside. And tomorrow's the last day of the quarter. Supposedly there's going to be window dressing. Maybe there'll be some window selling. That'd be cool too, but all the talking heads say no. Bye, bye, bye. So anyways, something to be aware of, and definitely showing that there could be, should be, some more movement to the upside in the VIX, which would be bad for the market, and we're going to have to wait and see. As always, all investing decisions are your own. This is John video for entertainment, educational, and consumption of time purposes only. Thank you.